Sofi and PayPal. It is these stocks' day to shine. They've just come out with numbers in the past few hours. We're going to take a comprehensive look at both of these companies in this video here today. There's 5 core things we're going to get into in this one. It's all focused on PayPal and Sofi. First thing we're going to go through is PayPal numbers. We're going to go through the facts around what's going on with PayPal, not opinion, facts. Then we're going to go through Sofi's numbers and the facts around Sofi right now. After that, we're going to go through my opinion on these PayPal earnings. Do I view the stock more as a buy today than I did 24 hours ago or not? Then we're going to do the same exact thing for Sofi. Do I view Sofi after these numbers have come out? Do I view this stock more as a buy than I viewed it 24 hours ago? Then we're going to talk about stock price expectations, where I expect these stock prices to go here over the next year as well as the next several years. I'm also going to show you in today's video my projections for PayPal's revenue, my projections for their net income, and the stock price over the next 4 years as well in this video, okay? I got a little motivational quote for everybody here today. It is this one: perfection is not attainable, but if we chase perfection, we can catch excellence. So I hope you enjoy that one here today. I want to thank everybody for being subscribed to the channel. Hello to the OGs out there, and also welcome the new 2,100 new subscribers on the channel. I appreciate y'all joining me. Today, for the pinned comment down there, I'll have an application to join my private group, as well as get access to the full 1000xstocks.com service as well. So that will be pinned comment if you're looking to apply and get access to all those and take investing up to a much more serious level than where you're at currently. Okay. Alrighty, let's get going here with PayPal right off the top. So PayPal, the facts around PayPal: total payment volume was up 11% for the company on a year-over-year basis. Net revenues was up 8%. This is on a GAAP basis here first, generally accepted accounting principles. So there's no change in anything how you want it and things like that. Like you can kind of make adjustments when it comes to non-GAAP. GAAP, you cannot. Transaction margin dollars up 8% as well. That's a big, very important number. A lot of people want to see transaction margin dollars growing as fast as a percent as revenues. Operating income was up 17% on a year-over-year basis for the company. Operating margin was up 126 basis points on a year-over-year basis for the company, which is just a fancy way of saying 1.2 percentage points. Net income for the company was up 10% year-over-year. EPS, earnings per share, was up 17% year over year. So you might say, how can a company grow their net income 10%, but their earnings per diluted share was up 17%? Like, how does that happen? I'll tell you how that happens. Share buybacks. If you take a ton of shares off the market, right, and your net income goes up, then your EPS is going to go up at even a faster clip than your net income overall. Now, additionally, if you look on a non-GAAP basis, 8% revenues up, transaction margin dollars up 8%, operating income on a non-GAAP basis up 24%, operating margin on a non-GAAP basis up 231 basis points, which is a fancy way of saying 2.3 percentage points, net income on a non-GAAP basis up 28%, EPS per diluted share 36% growth on a non-GAAP basis. Incredible, right? And then we look at adjusted free cash flow on a non-GAAP basis up 31% year over year. So, wow. Now, if we look at the overall income statement for PayPal, I graded this as an A- income statement here. Revenue $7.8 billion versus $7.2 billion in the same quarter last year. Transaction expense that was up, as it should be when revenues are up, right? But it was not out of control. Total operating expenses, they grew that at a much, let's call it, slower clip than they grew net revenues as far as the total dollar amount, right? Because you look at rough revenues up about $600 million, and you look at rough operating expenses that was up about, we can call it $400 million, right? Which means your operating income is going to go up substantially, which is sure enough what we see. Operating income was up around $200 million on a year-over-year basis. Income before income taxes came through at about $1.4 billion versus $1.3 billion in the same quarter last year. And then we look at net income, $1.1 billion plus versus just over $1 billion in the same quarter last year. Diluted EPS, $1.08 versus 92 cents. I mean, that's just good. It's just a very good income statement overall. There's no doubt about it, right? There's no debating that. If you want to look at the amount of shares outstanding, it definitely has gone down considerably here, which is something you want to see as a shareholder of the company. You want to see shares coming off the market rather than being diluted all the time. We look at the balance sheet here, cash and cash equivalents and investments total $18.3 billion. Now, debt total about 12.2, so there's about a $6 billion buffer there between cash in investments versus debts, which is very impressive for a company like PayPal. Now, if we look here on a trailing 12-month basis, they returned $5 billion to stockholders by repurchasing approximately 82 million shares over the past 12 months. So as I just told you guys, they're taking massive amounts of shares off the market right now, which if you're a shareholder, you should have rooted for the stock to be low for the past year. One, so you can buy shares for cheap. Two, so the company can buy as many shares as possible for cheap, right? Now, this is very, very important when it comes to the guidance the company just gave here a few hours ago. Look at this. For fiscal year 2024 this year, they just upped their EPS guidance on a GAAP basis and non-GAAP basis, okay? GAAP EPS, they're now talking about they're expecting 388 to 398. Before their previous guidance was for about 365. So it's a pretty considerable upward move for GAAP EPS. And this is coming in a time period when you're not seeing a ton of companies really raise guidance. This is great for PayPal. Non-GAAP EPS growth. Before they were talking about mid to high single digits. Now they're talking about low to mid teens. Teens. So we could be talking 15% non-GAAP EPS growth or so for the year, when before they were expecting, maybe 7%-ish, somewhere around there roughly. That's a huge, huge deal for the company. Now, additionally, look at this. A lot of folks out there thought PayPal could not grow active accounts anymore. They had topped and their active accounts were just going to go down and down and down. And that's not the reality. So if we look back, a year ago or so, they had active accounts 431, then it went down to 428, then it went all the way down to 426. And so people assuming active accounts had peaked, I don't blame them for assuming that at that particular time because active accounts were just going down. Well, it's reversed. Then they went from 426 to 427, right? And now this latest quarter, they went up to 429 million active accounts. So we're moving in the right direction when it comes to active accounts, which is big. Now we've got 2 consecutive quarters now of growth in active accounts versus just declines and declines and declines for the previous quarters, right? Additionally, payment transactions per active account was up 11% on a year-over-year basis. So basically, it just means people are doing more transactions. Their customers are doing more transactions overall. A lot more transactions. That's very good to see. If you look at transaction expense rate, 0.95%, that was versus 0.97% in the previous quarter, so moving in the right direction there. Transaction and credit loss, 0.08%. And if you look, that's improved quarter after quarter for several quarters now, so that's good to see as well. Transaction margin went from 45% to 45.8%, so that's moving in the right direction. So everything you want to see moving in the right direction. You want to see PayPal's attracting more customers. You want to see those customers doing more transactions. You want to see, transaction and credit losses come down. You're seeing everything you want to see in a business model like this. Now, inside the private group, Andre posted this. This was a great illustration here, right, of PayPal's operating leverage. Look at where the revenues are trending and look where the operating expenses are trending. That gap, as it gets bigger and bigger, is where a company gets more and more profitability overall. So this is phenomenal. This is what you want to see as a shareholder of a company. When your operating expenses are falling and your revenues are going up, it doesn't get bigger than that. Let's talk about the game of Wall Street. The game of Wall Street is you got to beat numbers. You got to raise guidance if you really want to be a super respected stock. What did PayPal do? Guess what? They beat and they beat and they beat and they raised those guidance numbers. So when we're talking about the game of Wall Street, this is very important. PayPal does things like this if you want to start to become a super respected stock and get all the Wall Streeters that have flooded out of the stock over the past 3+ years to come back to the stock over the next 3 years. You have to play the game of Wall Street and you have to do it on a high level. If you can't do it, you're not going to get the respect of Wall Street. You're not going to get these folks to buy the stock. So they're starting to play the game and playing on a high level, right? Which goes back to Alex Chris running this company. Andre also posted this inside the private group. This is an illustration showing you essentially the shares outstanding of PayPal. It's going down and down and down and down and down, which means if you own, let's say you own 100 shares of PayPal, right? And you owned 100 shares of PayPal in 2021 versus 2024. you're a bigger percentage owner now than you were when you were back in 2021 or 2022 because the company's taken so many shares off the market, right? It's kind of eating itself, which is beautiful. Now, this is important. You got to look at a company versus other somewhat peer companies, right? And PayPal has no exact peer, right? Some people could compare it to Square. In some ways it compares to Square. Some people compare it to Visa, which in some ways it compares to Visa, right? There's never going to be a perfect comp, but I like to compare it with somebody like a Visa. Visa just came out with numbers a few days ago, right? And I want to say, is PayPal growing at better clips than Visa, or is Visa outperforming them, right? Well, what we're finding here is it's kind of a split effort. So if we look at net revenues, Visa grew in their latest earnings, right? They grew 10% revenues, whereas PayPal's at 8%. So Visa wins that. GAAP net income, Visa grew 17% versus PayPal grew 10%. So Visa wins that. GAAP earnings per share, 20% growth for Visa versus 17% for PayPal. So Visa wins that. Now we look at non-GAAP net income, 9% for Visa, 28% for PayPal. If we look at non-GAAP earnings per share, 12% growth for Visa, 36% for PayPal. If you look at payments volume, 7% for Visa versus 11%. 11% for PayPal. So PayPal wins that. TPV is very important for both of these companies, very important. And PayPal won that by a significant margin there, right? It's very important. Now, processed transactions, pretty much the same for both companies, 10%, 10%, right? So this is impressive that PayPal is starting, keyword is starting, to beat Visa on many of these metrics. And the reason it's so important is, one, obviously Visa is such a great company historically, right? And such a well-respected company over the past, 3-4 decades. But this is why it matters even more. Check this out. If we look at Visa's valuation versus PayPal, Visa trades at much richer forward Ps, 2-year out forward Ps, trailing 12-month Ps than PayPal. If PayPal is starting to beat Visa at a lot of these metrics, then you eventually have to start respecting and valuing PayPal at least an equivalent level that you would Visa, if not a higher level. It's very important everybody understands this. And so when looking at this overall, it makes PayPal very attractive on a valuation front when you're starting to beat one of these companies like a Visa at so many of these metrics. It's very important here, right? Another way you could look at this is you can say, what is PayPal's total payment volume growth percentage versus what is GDP going up, right? Because let's say your total payment volume is going up 3%, right? Okay, if GDP is going up roughly 3%, you're just roughly in line with growth in the economy, right? But if you're growing at a much more substantial clip than GDP, that shows you're doing some things very favorable in your business model, right? And if you look at PayPal's total payment volume growth, it was about 11%, right, for the quarter. And if we look at the latest GDP numbers in regards to this latest quarter, right, 2.8%, which means PayPal's outgrowing GDP as far as total payment volumes by about 4x. That's a very impressive number. Very impressive overall, okay? Now, let's get into SoFi numbers, facts around SoFi. Then we'll come back to PayPal opinion, buy, and then I'll share projections, where I see the stock price going, all sorts of things. SoFi. This is, in my opinion, the most important thing for SoFi overall. This shows you the amount of members. I call them customers. They call them members. 6.2 million members in the same quarter last year, right? Now they're at 8.7 million customers. This is extremely important. If you look at Galileo, the tech platform, they went from 129 million users to 158 million accounts now at this point in time. And so what do you see when you see that? I'll tell you what I see. I see a company taking market share. I see a bank taking market share and putting themselves in a great position for the next 10, 20 years. They're stealing away customers. A lot of the millennials, Gen Z, and the next generation, Gen Alpha, a lot of those folks are going to be going with SoFi as their main financial institution versus a Wells Fargo, a Bank of America, a JP Morgan, places like that, right? Now, Check this out. This is their income statement. Total interest income came to $674 million. That's versus $469 million the same quarter last year. Net interest income, which NII is probably the most important thing you could ever look at for a bank, $412 million versus $291 million in the same quarter last year. That's extraordinarily strong growth for SoFi in net interest income. Now, total net revenue, $598 million versus $498, so that grew about $100 million on a year-over-year basis, right? If we look at net income for the company, we call that a winner, a chicken dinner. $17 million of net income in the positive versus in this same quarter last year, they lost $47 million. So the company has now sustainably flipped over to profitability. Now the EPS number came in at 1 cent. That's versus 6 cent loss in the same quarter last year. Keep in mind, some folks were talking about whisper numbers of 2 cents, 3 cents. So, not as exciting as you might have wanted to see, but overall, solid income statement here. I gave them a B minus. If we look at weighted shares diluted, this is one issue you have with SoFi is a lot of share dilution in regards to SoFi. We're hoping that starts to come down in a major way and we start to move the other way like a PayPal situation. But that is one issue you got, right? That's why I gave it a B minus overall. Now, if we look at the balance sheet, obviously balance sheet's very important for all companies, but it's extremely important when it comes to banks, right? Because they're taking risk when they loan out money. Now, if we look at total equity here, equity is around $5.9 billion. Now, how does it compare versus market cap? Market cap's at about $7.7 billion. So there's only about, we can call it a little less than a $2 billion difference between the equity of the company versus the market cap. And so that's extremely impressive considering SoFi is a growth stock. Like this is a major growth stock, not just like a little growth stock. Like this is a major growth stock. And so when I look at it, I got a major growth company with an incredible next 10, 20 year opportunity. And I can get stockholder equity versus market cap at only about a $2 billion difference, less than $2 billion, like that's pretty impressive. So that's what makes the risk reward in regards to SoFi very, very impressive, right? Now let's talk about PayPal. Is the stock more of a buy now versus 24 hours ago? And then we'll go from there, okay? So I view PayPal as more of a buy today than it was 24 hours ago. I am more confident in PayPal as an investment today than I was 24 hours ago. And it's for 4 core reasons. 1, the numbers were better than expected, right? We got beats across the board. It's good to see. 2nd, they raised guidance, which means the company is feeling even more confident about its future, right? It's it's a very optimistic thing to see when you see a company raise their guidance. That's like the best feeling as an investor of the company. That means the business is better than anybody expected, right? 3rd thing is, Alex Chriss has just proven out he's a real deal Holyfield. This is another quarter where better numbers than expected, raised guidance, strong conference call. He's a real deal. He's turning around this business. And the 4th thing is, they talked on this conference call like it's still very early days in regards to everything they're doing here. As far as their execution goes, they're talking about there's a lot more work ahead in regards to disciplined spending, right? Getting the business to a much more profitable state, getting more and more customers to use it, whether it be individuals like you and I, or whether it be big clients on the Braintree side, right? Or whether it be small businesses on the PayPal or Venmo side. They're executing already at a very high level, and Alex Chriss is still very early days, and they view this as early days, and they got a lot more work ahead. When you come out with better numbers than expected and you raise guidance, you could easily take a victory lap. And when I listen to that conference call, Alex Chriss and the management team, they're not even taking a victory lap on this. You listen to that commentary, they're still early days. We've got a lot more work ahead here. There's no victory lap there. And so, that's good. Alex Chriss talks about, we're in a lot better place today than we were 6 months ago. And we believe we're going to be in a lot better place 6 months from now than we are right now. That's what you want to hear, man. That's very, very good overall. Now, as far as me personally, I just turned profitable on the stock. Holy smokes, this ain't no jokus. Yep, $5,000 plus in the plus now in the public account. And it's a big step in the right direction because this stock had been, obviously it had been a money loser. And if we look at my big six in the public account, I mean, look at the gains. It's 290% Meta, 712% in Tesla, 68% in Amazon, 2,200% Elf, 197% Palantir, and then we got this silly stock named PayPal in the middle of it all at a 2.7% gain, right? But to be fair to PayPal, it's my newest position of those stocks, right? Elf I've been holding for like 100 years. Meta, I've been buying that stock since like 2018. Tesla, I've been holding since like, I don't know, either 2018 or 2019, right? Amazon was a big buy in 2022 and early 23. Palantir was a big buy in 2022. So, to be honest, PayPal just needs some time to play out here, but it does look funny as being in my big six and you got all those big dogs just tearing it up, and then you got PayPal at a 2% gain, right? Now, in regards to Sofi, and then we'll talk about where I think these stock prices are going moving forward over the next bit of time here. But as far as Sofi goes, so Sofi, let me be clear, the stock's still a buy. But I do believe Sofi got outshined by PayPal today. I do view that. I walked away from looking at both those company numbers, and I walked away feeling good about Sofi, right? But I just walked away feeling better about PayPal. And it doesn't mean PayPal is going to outperform Sofi over the next 3-5 years. It's just an overall feeling between seeing the numbers, hearing what the company's expecting moving forward. I just walked away feeling more confident. And that could also be a game of expectations, right? Maybe I went in with a little higher expectations than Sofi, a little lower expectations than PayPal. But I just, as of today, I sit here and I feel at a higher level about PayPal than Sofi. And once again, it doesn't mean I feel less bad. It's like saying I got a Model S Plaid and I got a Model X, right? And it's like saying I feel better about my Plaid than my Model X because I can go faster in it, right? It doesn't mean that much at the end of the day. I like both. But overall, in regards to Sofi, the numbers were very good. We all know that, right? Clearly, they're taking market share. They continue to take market share. That matters so much. If you're a long-term investor, it's the ultimate thing when a company can continue to grab market share. It's the Amazon effect, right? Amazon just over the decades just grabbing market share. Sofi's doing that. It's big, right? And Noto, the more you see Anthony Noto and the more you watch him and the more you see him executing with his business model, you've got to start to wonder, is he going to be the new age Jamie Dimon? We hear Jamie Dimon is starting to prepare for retirement. Doesn't mean he's retiring right now, but the preparations have started at JP Morgan for Jamie Dimon to eventually walk away. It's just a question of, does he walk away next year, the year after, right? But it's likely in the next few years. And so somebody's going to have to take that banking mantle away and really become the face of banking, and the guy that goes on CNBC and Bloomberg and everybody wants to interview him, right? Fox Business, everybody wants to interview him, get his state on where banking's at, where the economy's at, where his company's at. And that mantle's going to be out there very soon, likely in the next few years, right? And I don't view anybody as really taking that mantle right now. If I look at the guy who's leading Goldman Sachs right now, I don't see it in him. I don't see it at Moynihan, at Bank of America. I don't see it at any of these folks, to be honest. And so I'm looking and I'm like, Anthony Noto might actually have a chance to grab that mantle and become the next Jamie Dimon that everybody looks at in the banking sector for not only how's your company doing, but how's the economy doing? How's, the whole banking system doing right now, right? The guy that maybe gets very networked in with government, right? And even a lot of folks in government want to speak to him at the Fed, just has like a very high level of respect. We'll see. But the way he's been executing, I'm like, he might become that next guy over this next 3, 5, 7 years, okay? Now, in regards to Sofi, it's a smaller position for me. It's about a 1% weighting in the public count, roughly, right? That's about a $2.1, $2.2 million portfolio. It's $22,000 position, so about a 1% position. Sofi I view as, one of those stocks you can build out to about 1% to 3% position sizing is appropriate. And the reason I can't build it higher than that in terms of the amount of money I put in, like let's say I build it to a 2% position, it grows to be a 5% position. Great. But it's not like I want to put in that much money because at the end of the day, I have trust issues with financial institutions. There's only 3 financial institutions I've ever owned: JP Morgan, Goldman Sachs, and Sofi, which speaks volumes to how I respect Sofi to have it in that sort of sentence, right? but I don't usually like these sorts of stocks. So the fact that I even have a position here speaks volumes about where I think the risk reward profile is for SoFi over the coming years. But with that being said, I can't take too much risk. I'll keep the position sizing smaller. If SoFi is really that 5x, 10x opportunity, I think it is, I'm going to be very happy with having put $20,000, $30,000, $40,000 in the stock and it grows into a $200,000 or $300,000 or $400,000 position over the coming years. Like, bottom line, I'd much rather have that than put $200,000 or $300,000 or $400,000 into the stock and then they go belly up in a big recession or something like that, right? And I'm like, oh my gosh, like I put myself in a bad position. That's the way I view kind of these a little higher risk type stocks, right? Now, next up, let's talk about stock price expectations for these stocks moving forward. So in regards to SoFi, I'll speak about that one because PayPal is a little more in depth and I'm going to take you over the next several years in regards to PayPal. But here's the deal with SoFi. If smalls continue to roll through the back half of this year, SoFi will be $10 plus before we even get to 2025, okay? It'll be back to the double digits before we even get there. Now, in regards to longer term for SoFi, it's truly the sky's the limit. It's truly the sky's the limit, the situation in regards to SoFi. The bottom line is they're grabbing the millennials, they're grabbing the Gen Z, they'll likely be grabbing the Gen Alpha, and they have an opportunity to become a massive bank over the next 10, 20 years. As long as they make it through the recessions, they don't go belly up in those recessions, they make it out to the other side and they continue to take market share, SoFi sets themselves up where they can become the next JP Morgan, the next Wells Fargo, the next Bank of America. It's not happening today, it's not happening tomorrow, it's not happening next year. But over the next 10, 20 years, they have that sort of opportunity. And do you know where the market capitalizations are for the big banks, the big financial institutions? They're in the hundreds of billions of dollars. We're talking 12 figures. Do you know where SoFi's market cap is? It's $7 billion. So the sort of opportunity there, as long as SoFi never goes belly up in the recessions that we'll have over this next 10, 20 years, oh my gosh, is upside ridiculous. It's truly the sky's the limit situation. There is no top on SoFi. It could be a $500 billion company someday, a $1 trillion company someday, right? There's no top there. But there's big risk because it has to get through the recessions, right? So that's just a little food for thought in regards to that. Now, PayPal, this is a very impressive move. I think some people were disappointed considering the guide up, considering how strong the conference call was, the numbers, right? Some people were expecting like a 15, 20% move here today, and so they looked at it at an 8%, 9% move, whatever. I think this is a very impressive move. And the reason I think it's a very impressive move is, one, Wall Street's not going to magically get the whole PayPal story just because they reported this earnings. This is a story that has to be understood over the next 12 to 18 months, where more and more Wall Streeters look at the numbers, they start to get confidence in Alex Chris, the management team, what they actually have going on, the new data side of their business, right? And what's going on with Venmo, Braintree versus PayPal, the branded versus unbranded. And as they start to understand more and more, they'll be able to recommend it to their clients. They'll be able to, if the fund managers will put money into it, they'll see it as an opportunity, right? And you'll see the stock move up, but it doesn't just happen in one day. So I think this is an impressive move, considering not everybody's going to magically get this story today. The other reason I think this is a very impressive move is because of this. It's not a good day in the market for tech stocks, for the NASDAQ in general. I mean, NVIDIA is down 5+%. NVIDIA is the tone setter for the entire stock market. Let's be very crystal clear about that. It's the tone setter for the entire stock market. So when NVIDIA is down 5% plus in a trading day, it sets a huge negative tone for the whole market. And so if I can have PayPal buck that trend and go up 8 or 9%, and we'll see where it finishes out trading, and NVIDIA is down 5%, I think that's a huge win, right? Now let's get into my projections. I'm going to show you my base case for PayPal, my bear case for PayPal, and my bull case for PayPal for this next few years and where I see the stock price going, okay? Now, this is our new fancy tool on 1000xstocks.com. I told you guys we're working on a lot behind the scenes. We're working on a lot, baby, okay? And this is our newest tool, okay? In addition to the search feature, which shows you where companies are trading at versus where the market trades at, our compare feature where you can compare 3 stocks versus each other, right? And all the different metrics versus each other, our earnings call tab, SEC filings, our metrics tab, our education tab, where we teach you a ton of this different stuff now, right? Now we have the valuation tool, okay? So let's look at my base case first. So what we have here is 2024 through 2028, right? We have the revenue that is expected roughly for 2024, and then I put in my growth rates I'm expecting. So for my base case, I'm expecting a 7% average growth rate per year. Now, when you're playing around with this tool, you can do it however you want. So let's say you think PayPal is going to grow 9% 2025, but 5% next year, and whatever, right? You can change it up. When I do my projections personally, I like to keep it at what I think the company is going to grow on average over the next 4 or 5 years. And so when I look at PayPal for the next 4 years, my base case is they're going to grow revenue on average 7%. So that's why I put 7% for all these line items. So that puts them in 2028 at about $42.5 billion of revenue, okay? Net income for the company, I have them slightly outgrowing the revenue as far as net income grows for their base case, which is 8%. Now keep in mind, the company's growing net income way faster than that right now, okay? But I like to still be a little conservative when I do my base case, okay? So I have them slightly outpacing revenue growth when it comes to net income, right, at 8% number. So it put the company at about a $5.9 billion roughly net income in 2028, right? Now, as far as if we gotta have a company here that is growing, let's call it revenue at 7% clip on average per year and net income at an 8% clip, and they're a payments related company, they should command we can call it a P somewhere between 20 and 30, similar to where Visa usually trades at. Visa usually trades at a 20 to 30 range, right? Now, then it puts the stock next year at somewhere between $87 and $131 as my base case, right? That would put the stock in 2026 at somewhere between $94 and $142. 2027, somewhere between $102 and $153. And then 2028, which is really what I care about because I'm investing in companies for the next 3, 5, 7 years, right? We're talking a stock somewhere between 110 and 165. And that's my base case once again. And I think my numbers are pretty conservative for my base case, okay? So when you look at something like this, it's hard not to buy PayPal stock, just to be honest. It's very hard to buy. Never mind if Alex Chris really innovates. Sheesh. Because here's the thing. I put this because I expect a recession during this time period. So that's why I have them only at 7% for my base case, because I do expect a pretty good sized recession at some point in the next 4 years. And so that could short term hurt the numbers, right? But then they'll play a little catch up coming out of that. Now, for my bear case, for the bear case, 2 things have to happen. One is over the next 4 years, we have to have a massive, massive recession. I'm talking massive recession like great financial crisis type recession, right? Huge unemployment cycle. Unemployment goes to roughly 10% or so. And additionally, with my bear case, the company does not innovate at a high level, and Alex Chris, doesn't do what he's been doing so far at the company, which is execute at a high level. So we're talking about mismanaged company plus major recession in the next few years, right? So that would put revenue growth at a very embarrassing 4% number on average a year. That would be bad. When you think about how bad the consumer environment's been over the past few years, and you look at PayPal's revenue growth, to go down to 4% number would be horrible. But that's what I have for my bear case, okay? So it would put the company at about $38 billion of revenue in 2028, right? I have them only doing net income growth on average of 5% a year. 5%. Once again, this company's growing net income double-digit percentage, so 5% would be awful, awful. So that would put them at about $5.2 billion of net income in this sort of situation in 2028, right? Now, if you're talking about a company growing revenue at about a 4% clip on average a year and a net income at about 5% clip on average per year in the payment space, you're talking a PE somewhere between 15 and 20, right? People are not going to pay up a big value, they're not going to pay a high number. They're going to pay roughly a market multiple, and the market trades somewhere between 15 and 20 usually, right? So, those growth rates are roughly what you would expect in the market in general. Now, in this sort of situation, in 2025, that would put the stock somewhere between $64, which is actually where it trades at today, literally today, and $85. It would put the stock in 2026 somewhere between $67 and $89. It would put the stock in 2027 between $70 and $94. And it would put the stock in 2028 between $74 and $98. The beautiful thing about PayPal is even in my bear case, I'm still going to make money in this stock over the next few years. Obviously, that would be a disastrous situation, growing revenue 4% on average a year for the next several years. But if I can still make money in a stock over a 4 or 5 year span, even in a bearish scenario, that means the arbitrage there is pretty insane. The risk reward profile is off the charts. Off the charts, if I can do that, right? And remember, all this talk about competition in the last 10 years, right? Apple Pay, Google Pay, Samsung Pay, Cash App, whatever you want to say, right? Zelle, blah, blah, blah. All the competition came. It's all been here for 10 plus years now, right? And yet look at PayPal's numbers. The company just grows and grows and grows. Their revenue just keeps going higher. Their net income, their earnings per share, right? Their share count keeps going down despite all the competition. And so even in my bear case, I mean, it's the risk reward profile is insane. But let's have some fun. Check out my bull case. And keep in mind, my bull case is probably very conservative compared to a lot of bull cases out there. Here's my bull case with PayPal. So, in my bull case, I have the company doing 10% revenues per year for the next several years, right? On average, 10%. Now, this case assumes that Alex, Chris, and the team continue to innovate. They continue to execute at a high level. And we also come to the realization that we've been in a recession for the last couple of years. But we don't actually ever see a massive unemployment cycle. We see unemployment stay, let's call it 5% or under over the next several years. So that's what my bull case assumes there. And we actually, in this case, we assume the economy actually starts to strengthen in 25 and beyond. And the reason being is essentially the consumer environment's been horrible. Consumer sentiment's been horrible. The consumer's been destroyed by inflation for the past 3 years. And the consumer's finally, in 2025, going to start to not be hit by inflation. It's already starting to not affect as much in 2024, but it's going to be full on that it's no longer like hitting the consumer inflation. But real wages should stay in a pretty good place because unemployment, if you're 5% or under with unemployment rate, right, real wages are going to stay in a good place in that sort of environment. So that's what my PayPal bull case, it basically has 10% on average revenue, which is just slightly better than the company's been at, right? Net income growth for the company, 15% on average. So they should be able to grow. You know, all good companies should be able to grow their net income at a much better clip than they grow revenue, right? So in this sort of situation, I have the revenue going to about $47.5 billion in 2028. The net income would go to about $7.5 billion in 2028. Yeah, this is fun. Now, if a company is growing revenue at a 10% clip and net income at a 15% clip on average, you're going to be able to command a PE somewhere between 25 and 35 for that company, right? Especially in the payment space. So in this sort of situation, 2025, we're looking at a stock price somewhere between $116 and $163. In 2026, about $134 and $187. 2027, about $154 and $215. And then 2028, we're talking $177 to $248, right? Which is a pretty insane CAGR over the coming years in regards to PayPal. So this bull case looks absolutely beautiful, right? And, you know, you can go on 1000xstocks.com if you have access to it, right? If you don't have access to it, apply for access to it. That's pinned comment down there. But you can go on 1000xstocks.com and type in PayPal and play around with your numbers, right? Maybe you have a much stronger revenue growth than I have or net income growth. Like you can easily play around with these numbers and, you know, enter in whatever you want to enter in for what you are projecting out. But the risk reward for the stock is insane, right? And so overall, I'm a very happy shareholder of both PayPal and Sofi. In Sofi, I view it coming out of this earnings as it's a mid-risk stock with super high reward, like insane high reward, right? PayPal is a low-risk, strong reward stock. That's how I view this, okay? All right, guys, appreciate you joining me as always. If you're looking to take your game up to a much higher level than where you're at when it comes to investing and become a great investor, click the pinned comment down there, fill in an application, join my private group, get the access to 1000X, and let's get going, okay? Much love and have a great day.